record first. Okay. Okay. So I'm going to share you. I'm going to read along with you this particular news, and after that, I'll be asking you a question regarding any ideas from your side, right? So I expect a little bit of high participation from yesterday, because yesterday we have already done one case, so we might have we can chip in a lot more ideas, I guess, today. Okay. And the second time again we will dissect the news one by piece by piece, and we'll try to understand what are the material informations inside it. Okay. Okay, let me share my screen. Okay, so again, let me repeat. First, I'll plain read whole news. Second, I'll be asking you a question. What are the things you have understood? And third, we'll dissect together. Okay, what are the material informations which are necessary? Okay. I hope it's visible, right? Okay. So let's start, shall we?
So why is it always truck startup?
I think yesterday was not a truck, it was freight, like kind of related to truck as well. But I had another news as well on my selection that is like a little bit maybe relevant. This one, 21-year-old built a popular Instagram account, Wall Street Confessions, to shine a light on light in finance. Okay. I was about to read this page, but as I went through, I could not find material information which we could relate to our chapters, which we have already studied, ratio analysis and analysis, right? So I chose this, although it's again talk, but
Okay.
it's interesting, in the initial times when I was displaying you slides of capital budgeting, I was mentioning you that automobile company like Ford and big companies like Tesla, they are trying to automate trucks, right? And they are trying to bring driverless cars and bring automation in the industry, right? So this is something which is kind of proof and uh, kind of backing of this information authenticates that news. So moving on, robot truck startup Embark joins race to go public in spec deal that raises 614 million. Okay. So, okay, let me plain read. Embark, a San Francisco-based developer of robot truck technology, plans to list shares in a merger with a blank check company that may raise $614 million to help meet a goal of commercializing its service by 2024. The company is also adding former U.S. Transportation Secretary Elaine Chao to its board. Led by two young Canadian computer scientists and Forbes 30 under 30 alums, Embark said it's merging with Northern Genesis Acquisition Corp. 2, a special purpose acquisition company listed on the New York Stock Exchange as NGAB. The deal will boost Embark's valuation to as much as $5.2 billion and provide up to $414 million in cash and $200 million from a common stock pipe that is backed by Silicon Valley-based DCVC CPP Investment, Knight Swift Transportation, Mobile Capital, and Sequoia Capital, and Tiger Global Management, as well as Northern Genesis and its institutional investors. Okay. The plan makes Embark the third robot truck developer to head for the public markets, following TU Simple, which listed shares on Nasdaq through a traditional IPO in April, and Plus AI Corp's announcement in May that it would list shares through a SPAC merger with Hensei Capital Investment Corp. Unlike developers of self-driving robotaxi technology, Embark, TU Simple, and Plus have been able to generate modest amount of revenue by hauling loads for commercial customers as they refine their software and sensors. In Embark's case, those include N Hughes, Busk in Web, HP Werner Enterprises, Messila Valley Transportation, and Bishop Transportation. We have been solely focused on solving problem of self-driving software for trucking since Embark CTO Brandon Mock and I founded the company in 2016, said co-founder and CEO Alex Rodriguez. After many years of R&D and world's most mature self-driving truck software stack, we plan to enable carrier operation of self-driving trucks in US Sunbelt beginning in 2024. Following the transaction with Northern Genesis, we expect to have a war chest that fully funds their commercialization plan, and then some. Funds from the SPAC merger are needed as Embark works to compete with more heavily funded players in Uber trucking space, including Alphabet Inc., Waymo, in addition to TU, Simple, and Plus. Other competitors include Kodak, which recently added Bridgestone as an investor and autonomous tech developer, or Aurora Innovations. Okay, so Embark is targeting annual revenue of 867 million in 2024 and 2.7 billion by 2025, according to its investor presentation desk. Details of its 2020 and likely 2021 revenue weren't part of its SEC filing as of June 23. Now, let us read up to here. Okay, June 23. I think there are not much. Okay, so we are up to here. Okay, from the start to June 23 up to here. So my question to you is, what are the things you understood about this news which can be material for financial analyst? Okay, let me note down your inputs as well. Okay, so I'm waiting for the answer. Please, you can go through it again. Okay, so floor opens for your ideas.
Cash flow rate and
yes,
cash flow time.
okay,
Rate of return.
cash flow rate and cash flow
Time, rate of return.
time, rate of return,
And payback.
payback. So these are the, you mean to say these are the things we can find from this news?
We should look at that to analyze.
Okay, yeah, great answer, Archana, in generic. But I would like to ask you that what did you understand from this news after reading this news? My question is that, like, what are the material information which you can take back?
That the company's first year, or in 2024, they said that
Okay,
they will have some million, but their target in the next year is 2020. In the next year 2025 is 2 billions,
okay,
which
okay,
shows
yes,
a nice symbol.
yeah.
Yeah.
So yeah, they are really ambitious. We know that, right? They are targeting annual revenue. Yeah, great answer. Annual revenue of dollar 867 million, right? In within 2024.
Yeah.
Okay, and 2.7 billion by 2020. right? You can see here on the last part,
Yes,
isn't
sir.
it?
Exactly त्यो
So,
नम्बर थाहा थिएन त्यही भएर.
right. It is also a case of capital budgeting, isn't it? Because this particular company, right? What is its name? Embark, right? Embark needs funds, right? And they are wanting to invest in this project, right? And after they will invest in this project for a certain time, like especially in initial times, they need to invest a lot of amount of money, right? There will be huge outflow. And after a certain period, maybe 1 year or maybe after a second year, then cash inflows will start to generate, isn't it? So they are not forecasting like within 2022 we are going to earn 867 million. They are taking a little bit of space, like within 2024, like after 2 or 3 years, we are going to earn certain revenue, isn't it? So our assumption that initially cash outflow happens and after a certain period, maybe 1 or 2 years of maturity, and then company will start to embark huge amount of revenue. That is another one classic analysis we can do. Thanks, Archana. I'd like to request others as well. Please chip in your ideas, whatever you have understood from this news. Anyone else? Or shall I call the names? Praveen, yes.
सो कम्पिटिसन चाहिँ टफ नै छ अल्फाबेटसँग भनेपछि अल्फाबेट भनेकै गुगल हो है कम्पनी प्लस
Praveen, you are not audible. Can you please check your audio?
हेलो
Your voice is a little bit small.
सर सुनियो अब
Yeah, better, better.
हजुर अल्फाबेटसँग कम्पिटिसन छ इट मिन्स अब सफ्टवेयर बेस कम्पनी के रहेछ गुगलसँगै कम्पिटिसन गरेर आएको छ भने चाहिँ इट माइट बी टफ अनि सर यत्रो मिलियनै उठाइरहेछ अनि क्यास बर्डनको कुरा हुन्छ क्या जहिले पनि यस्तो ठुल्ठुलो कम्पनीजहरूलाई र क्यास म्यानेजमेन्टको चाहिँ कसरी गर्छ भन्ने कुरामा चाहिँ अलिकति कुरा छ अनि प्लस लको कुरा नै आएको छ सेक्सन फाइलिङ एज जुन भने जुन चाहिँ रेभिन्यू अफ वेरेन्ट फाइलिङ सेक्सन फाइलिङ एज अफ जुन भनेको छ नि लको कुरा युएसको सेक्सन के भन्ने ल के अरे कम्पाइल
Yeah,
के अरे कम्पाइल गर्न चाहिँ क्या हाम्रो यो कम्प्लायन्सको मा चाहिँ कसरी कम्पाइल गरेको छ असल भएको रहेनछ 2021 को रेभिन्यूको कुरा पनि त्यसमै सिकाएको छ क्या अरे
okay.
अनि
So
इन्भेस्टमेन्ट चाहिँ
what
धेरै
else?
इन्भेस्टमेन्ट चाहिँ टन्नैबाट लिएको छ ठुल्ठुलो कम्पनीजबाट रिनाउन्ड कम्पनीज एन्ड के अरे हेज फन्डबाटै लिएको
Yeah,
पनि टन्नै छ अनि सफ्टवेयर
yeah,
बेस भएको कारणले यो टेक्नोलोजी अथवा सफ्टवेयर नै अपकमिङ सेक्टरमा भन्नाले अर्कोलाई रिप्लेस गर्न सक्छ कि सक्दैन अरू कुनै कम्प्युटर आएर रिप्लेस गर्छ सक्छ कि सक्दैन अहिले पो यो टफ हुनसक्छ सफ्टवेयरमा चाहिँ आज
yeah.
एउटा आयो भोलि पनि त्यसलाई फ्लप गर्ने अर्को पनि आउनसक्छ के दिनदिनै त्यो
Yeah,
अपडेट के भन्नाले चेन्जेस आएको कारणले त्यो कुराहरूको चाहिँ
yeah.
खासै आएको छैन मेन कोर बिजनेसको बारे ओभरअल भ्यू त छ कोर बिजनेसको कुनै आएको छैन कि त्यो सफ्टवेयर एआईकै बेसको कारणले गर्दा चाहिँ
Okay.
अनि
So very keen in,
रो
yeah.
रोबोट के अरे ट्रक बेस्ड टेक्नोलोजी भनेको छ तर त्यो रोबोट बेस्ड टेक्नोलोजी गर्छ चाहिँ के एक्ज्याक्टली
Okay, so we don't have all the information, right, Praveen?
हजुर
So according to Praveen, right, there was one there we must see cash, how much cash burden, how much handling the company does about cash burden. Another, since in the question there is one skeptic part, right? It is also nice approach to always approach as an investor. You must be skeptic and ask questions to the particular news. And like Praveen has been applying skepticism, I guess. And see, you can see from this details of 2020 and likely 2021 revenue weren't part of filing. That means that this company has not filed or has not shown these details.
डिटेल त गभर्मेन्ट
So there must be something fishy, according to Praveen, right? That is really interesting observation. We learn that again before investing. And another one, he was mentioning that investment from big companies, right? Other companies are also interested. It was third, right, to go public. These kind of companies. And moving on, also. I think we can guess. We could not exactly understand everything, but we could guess that they want to build driverless truck, right? From the news itself, right?
अनि
Robot truck, right? By the name robot means it operates itself.
ड्राइभरलेस त भएछ इम्बाक भने कम्पनी नै पहिला अटोमोबाइल इन्डस्ट्रीमा होइन भनेपछि हाउ क्यान दे नो सफ्टवेयरमा दे आर कम्प्युटर साइन्टिस्ट दुईजना चाहिँ जो कम्प्युटरमा जिनियस हुनुहुन्छ होला तर अटोमोबाइल सेक्टरमा त होइन उहाँहरू अनि
No, yeah, it's Embark has been developing its autonomous truck technology since 2016, right? So I think this line answers your question, making it the longest running robot truck program in the US. They have been trying to they are experimenting, like it's been taking a long period of time, and but they are in the business since 2016. I think they are in huge loss, by reading this article, isn't it? Okay, so any other ideas? Very interesting observation. Thank you, Praveen. Thanks, Archana. Anyone else? Please chip in your ideas. Okay, so let me again dissect some of the information, okay, along with you. Embark, a San Francisco-based developer of robot truck technology, right? So let me write along with you. Okay. Okay. Key points, okay. Okay. Embark San Francisco, right? Means the company name is Embark, right? So what is its work? Robot truck technology, right? So plans to list shares in merger. Okay, what is its plans to list shares? List shares in a merger with a blank check company. Blank check company. What is the valuation they are wanting to raise? 14 million. And need for fund. What is the need for fund? To help meet a goal of product. So they are trying to commercializing its by 2024. Okay. So the company is also adding farmer US. So somebody is coming on in board, right? Always make sure that you understand. You can go back and see the profile of this person, Elaine Cheos. He might be someone who brings a lot of energy. Okay, so we led by two young Canadian. Now it's a history computer science. Embark said it's merger with okay. Embark said it's merging with Northern Genesis Acquisition Corp, a special purpose acquisition company listed on New York Stock Exchange as NGAB. The deal will boost valuation of 5.2 billion and provide up to 414 million in cash and 200 million from a common stock pipe that is backed by Silicon Valley-based investment, transportation capital, Square capital, and management, as well as the institutional investors. Right. So they are not going public, but rather they are merging with another company named. What was the name of company? Blank check company. The blank check company name was Northern Genesis Acquisition Corp 2, right? Or a special purpose acquisition company, right? And third, the plan makes Embark the third robot truck developer. So they are, please note that they are third company of such type. You have to understand that because to do segmental analysis for the public markets with shares, right? Here are details of that. Moving on, we have solely focused on solving the problem of self-driving truck software stack. Now, as Praveen also mentioned that they have one software, right? It is the name of software stack. So you can go back and see the research like of the software stack. How will it work in the in the coming world within, or will it work like Android is working right now, right? When Android came, replacement of Nokia system, right? We're skeptic, right, whether it will work or not. So stack is like Android or it is like Nokia. We have to understand that, because if new software comes up, right, there will be huge cost implication for this company, and in return shareholders wealth might decrease, right? So this is another analysis we must do, credibility of checking credibility of this software. We plan to enable career operations of self-driving in US belt beginning in 2024. Funds for SPAC are needed as Embark works to compete with more heavily funded players in robot trucking space, including Alphabet, Waymo, in addition to, so they are competing with who? Alphabets. This might be company of Steve Jobs, as far as I remember.
Sir, no, Google.
Waymo, Alphabet company. Okay.
Alphabet Google.
In addition, it's of Google.
Google Alphabet.
Hey, Google must have acquired. Oh.
And
Steve Jobs left Apple for, yeah. It
Alphabet
must
को
be of
sister
Google. So
Alphabet को sister company चाहिँ Google हो के मेन चाहिँ कम्पनीको नाम चाहिँ गुगल भनिन्छ नि गुगलको नाम के अरे पेरेन्ट कम्पनी चाहिँ अल्फाबेट हो के
yeah. Okay, so I'll do research about that as well. Okay, so in addition to TU Simple and Plus, other competitors in Aurora Innovations. Okay, so Embark is targeting revenue. Now they are targeting, right? So that is observation by Archana. Target annual revenue of dollar. Now this is very important. 867 million. Now what we can do by checking this, okay, by knowing this, what we can do, we can ask management, what is the basis of your valuation, right? You have given us a certain figure, right? These two figures, right? You are telling us that your annual revenue is going to happen. You are targeting annual revenue as 867 million in 2024. Can you show us the factual informations you are based this information with, right? So you as an investor or you as a third person, you can always go to the company and ask them what is the basis for this valuation, okay? And if that basis is justifiable for you, okay, after commercialization, if the assumptions they are putting in the forecast is realistic, then only they can gain the valuation of 867 revenue, right? Because right now they must be in huge loss. It's simple to understand, isn't it? Because its commercialization has not begun. There are only outflows as far as we understand from the news only, right? So you can always ask the valuation basis, okay? And another, they have also been telling us that their revenue will increase to 2.7 billion by 2025. Within 1 year, they are going to increase by 4 or 5 folds, right? So they must be aiming for high growth within 1 year as well. See, 867 and 2.7 billion, right? So automation big rigs to handle highway driving increase is seen on somewhat earlier commercial application for self-driving technology owing to the simpler operating environment of highways. So now you can read further. So these are the things which you have, I think, deciphered from this news, and it's completely up to it's my perspective. You can add new things, right? Something which I could not see from my lenses, right? What I have seen, the name of companies is Embark. It's robot truck technology. What it does, list shares in merger with blank check company. Later on, we found the name of company as well, and it is trying to raise $614 million. Need for fund, they want to commercialize its service by 2024. They want to sell its product. They might have prototype, right? Like in our Pulchok campus, many engineers, what they do, they usually prepare a prototype, right? You might have your friends around there, they prepare prototype, but it's not commercialized, right? For commercialize, they need mentors, seed funding, and a lot of other stuffs like that, right? So this company as well, they have prototype, they want to experiment, and they want to now sell, they want to commercialize. Now, one new person is in board, Elaine Chios. So we have to research about that person as well, whether that person is as a driver of the company or not. Third, it is a third of such company in Stack Software. We have to see about Stack Software as well. So mainly our revenue of 867, we have to ask there. backings. So this is how we do analysis. Okay, this is how we analyze news. So I hope I'm clear. Any confusion in this before I move on?
No, sir.
Okay, thank you.
सर हजुर कन्सल्टेन्ट पनि हो
Yeah, I'm consultant, financial consultant as well. Okay, so I would like to request each one of you not to like constrain your thought process. Don't feel that you are bachelor's student or regard. See, I can show you one news like 21-year-old built a popular Instagram account of Wall Street Confessions, and she is starting to have a big impact. So regardless of age, regardless of your potential, right, or regardless of your like grade, I would say, or educational background, you can always start from today itself. Okay, so please don't constrain yourself by thinking that maybe I'll complete my bachelor's or complete my master's and I'll start something. You can just do that, right? And please go through these websites, forbes.com, or even in Nepalese context, Nepal Rashtra Bank. Please go through articles, right? Always write your key points. That way you will become wonderful financial analyst for future to come. Okay. So my exercise was for you to understand these articles. I hope out of 100% I told most, I would say 2-3% you know better. I'm so proud of you. And others who are confused, I hope 5 to 10% you have grabbed what are the things you might want to look. Okay, I think so. Let us okay, let me share one quick tip to you. I already mentioned about demat account last time, right? So there is one still another big opportunity is coming. You as my finance student, I would not, I'll be really angry if you don't apply for these stocks. Please don't forget to apply. Everyone, please open your demat account and I'll show you how much money you can make from this. Okay.
सर हजुरलाई नि एउटा सुझाव तपाईँले पनि त्यो प्लगइन
Sure.
छ नि एड ब्लकर चाहिँ हाल्नु न तपाईँकोमा एकदम एड पपअप भापै गर्दो रहेछ
Hey, okay. Google Chrome. Okay, thank you so much. I'll try that from any time. So like I'm trying to be tech savvy, you know, you cannot help but you have to be tech savvy in this world. Okay. So moving on, I'll quickly show you. I'll not take much of your time. So this is share Santhar. I already showed you whenever IPO or something comes up. Here is 2 IPOs coming up, guys. It is a lottery. This first one, Monokamana Smart Lagubita Bittiya Sanstha. Why it is lottery? Because it's there are very rare, very few shares which they are going to issue, and small, bigger the pie you are going to get, bigger the lottery it is, right? So by the click of 2 minutes, right, you might earn around more than 50,000 rupees. Okay, so let me show you one similar kind of stock. Okay, what is the price of that? Okay, so this is a similar kind of stock. Okay, so this is Mahila Lagu Bitta. Its IPO was issued 3-4 months back, and its price is right now 4,670. Okay, and out of this 4,670, if you had invested in this share, okay, in IPO at least, don't go for secondary market. I'm not telling you to invest in secondary market. If you had invested in MLBSL, right, 1,000 rupees, you would have earned today 46,700 rupees. So how much folds you were about to earn, right? So this is also Lagu Bitta Sanstha, it's microfinance, right? So similar kind of microfinance is this Monokamna Smart. So minimum you are going to earn around minimum over 20,000 rupees, and it might reach up to 50,000. So that is my disclaimer. You can earn up to 20 to 50,000 rupees just by click of 2 seconds. And again, another Lagu Bitta is also there, and you might earn 10 to 20,000 minimum, and maximum it can go up from this second one. And for these 2 applications, you might earn good amount of pocket money for you. So guys, everyone, how many of you are here? 22 of you. I would like to listen that every one of you applied for these shares. Okay, please apply. If you get it, after out of 22, 2 or 3 will definitely get it. Okay, So please apply for these shares. Okay.
Sure, sir.
Okay, so if you don't have Demat account also, please open it as soon as possible before it comes live. Okay, so this is it. So let's go for attendance, and then I'd like to do roll calls, and then we will move on. Okay, today is Thursday, 24th June. Okay, Alex. Okay, Archana.
Present, sir.
Okay, Ashish.
Yes, sir.
Okay, Dipesh. Okay, Ivan.
Yes, sir.
Present. Jeju. Jeju. I think Jeju is absent. Marina. Present. Minju.
Yes, sir.
Great. Nissan. Perfect. Ojasvi.
Present, sir.
Okay. Prakriti.
Present, sir.
Okay. Prasamsa. Okay. Praveen. Okay. Raman. Raman. Okay. Ratnaprabha.
Present, sir.
Okay. Revision. Okay. Ritiz.
Present, sir.
Okay. Rivaj. I think Rivaj is absent. Ronim. Ronim. Absent. Satyam. Present. Salina.
Present, sir.
Okay. Sarisma. Okay. Shekhar. Shekhar. Shekhar absent. Smith.
सर शेखर छ माइक्रोफोन चलाएको छैन त्यो मान्छेले सिजीको नेट जोड्दैछ अरे आज
So, no, he can type in chat, right? So we cannot assure that whether he is in class or not, isn't it? Smith, I'll call again. I'll call names again. Smith. Smith. Smith is also absent. He might be in the class, but Swarup.
Yes, sir.
Okay. Unes.
Present, sir.
Okay. So let me call the name of absentees. So if you are present or if your mic is not working, please type in chat box. Okay. Jeju is absent. Rivaj absent. Ronim absent. Shekhar absent. Okay, so
Yes,
Shekhar is
sir.
present. Smith.
Yes, sir.
Okay.
Smith is also present.
Okay. Okay, Smith present. So okay, we have three absentees: Jeju, Rivaj, and Ronim. So let us move on with the slides. So before that, so I'd like to ask Archana to please revise our session. You were nominated, right, in the last class. So
Yes, sir.
floor is over to you. You can take 1 to 5 minutes according to you, whatever you wish, and you can tell in your own words whatever you have understood in last class. Okay, so floor
Yeah,
is yours. Over to you, Archana.
sure. Thank you, sir. Good morning, everyone. So yesterday we studied about a little about the article China's Uber, like trucking startup Mint, the country's latest billionaire. We saw that the company was at loss and the main investor just owned 15% of the share, which is proof that the company cannot be reliable. This had they had dollar 17 to 19 bid, and the highest bidder won the share. The few criteria to decide if the project should be accepted or rejected can be net present value (NPV), internal rate of return (IRR), modified internal rate of return (MIRR), regular payback, and discounted payback. We revised about the overview of capital budgeting as well. We and Sir mentioned that NPV is most important thing in this chapter to understand. Any and every sector needs capital budgeting. We learned that NPV is simply the present value of the project of free cash flow discounted at the cost of capital. NPV tells us how much project contributes to the shareholders' wealth. Most of the company have more cash outflow in first few years. We learn how to calculate NPV as well, and we compared two projects, Project S and Project L, where we found out that Project L is better than uh, Project L to invest upon because it give higher return. Um, but it all depends on whether the project is mutually exclusive or not. Mm, the value of Project S NPV of Project S was $78.82, and Project L was $100.40. We learned a little about IRR, which is internal rate of returns, and we learned that IRR is when NPV is equals to 0. So that's it. Thank you.
Thank you so much, Archana. Big round of applause for Archana. Thank you so much. That was meticulous report. Thanks so
Thank
much.
you.
Okay, so please, would you nominate someone from the class? One person.
I'm sorry, it has to be Alex.
Alex?
Yeah.
No, why it is sorry? Don't apologize. Like it is an opportunity, right? Alex can modify the terms and he can see in his own way, right? So Alex, you have been nominated. So you please be ready for the next class. Is it fine? Alex? Okay. Okay. You can take 1 to 5 minutes and you can, like I've been telling you, there is no need to cover everything, right? But if you want to do, then that's even better, right? Okay. So let's move on with the class, okay? So in the last class, we were discussing, as Archana mentioned, in an awesome way, right? We were discussing about internal rate of return, right? And interestingly, we were understanding the point that IRR, in the case of IRR, we have to do hit and trial method, right? And Praveen, did you find any other way to find this formula? Did you research on it, or you are still researching about it?
हेरे नि छैन
Okay. So weekend is
तर
coming. You can do that in
सर
the
तर
weekend. Yeah.
सर यो चाहिँ ग्राफ पर्छ नि जुन चाहिँ हामीले ऊ पढ्छौँ नि त्यो के अरे इन्ट्रिग्रेसन पढ्छौँ नि उसमा
Yeah.
इन्ट्रिग्रेसनको त
Yeah.
0 टु लिमिट लाएर गऱ्यो भने चाँडो फाइन हुन्छ क्या
Yeah. I
ग्राफको
mentioned in the last class, Praveen.
टप र उस गरेर
Yeah, I addressed that, right? You can do graph method, and it's much easier according to, yeah, as Praveen said, right? And it is easier as well through graph method. But since we need extra resources, like we need to have graph paper and we need to plot the cases, right? You can do that at home if you want, right? Or you can calculate that if you want to do through different medium. But usually we try to calculate through these methods because we usually don't have graph paper, right? But if we can have graph paper and do that, then that's great.
सर क्यालकुलेटर चाहिँ अब डाइरेक्ट पनि हुन्छ नि सर ग्राफको त अझ साइन्टिफिक क्यालकुलेटरमा चाहिँ
Okay, so we might be discussing that graph method, Praveen, later. I have not developed resources for that graph resource, right? So if you want to learn extra method, you can always do. And if our scientific method calculator that's also good. हामीले यो calculation पनि calculator बाट एक एकवटा सेभ गर्दै गर्दाखेरि calculator बाट एकैचोटी निस्किन्छ. I think there will not be much trouble for that as well. Hey, okay. You can apply your method, Praveen. Like if there is alternative, there is no hard and fast rule that whatever I have taught in the class or whatever method I have been telling you, it's not necessary for you to follow that. If you have, like if you want to perform through graph method, that's even better, right? So that will enhance your comprehension of chapter, okay? Okay, so moving on, IRR, in the case of IRR, NPV is 0, okay? We learned this last class, and I was about to show you hit and trial method, I guess, right, in the last class. Did I show hit and trial method in the last class? Demonstration of hit and trial method?
No, sir.
No, right? So okay, so let me show that. For project S, okay, we are going to perform a calculation of IRR through hit and trial method, okay? Share application. Okay. Okay, so here are the details. Okay. Here are the details of the project. Okay. So this is, let me zoom a little bit for your convenience. Okay. So here is year 0, 1, 2, 3, and 4 of project S. Minus 1000 is the outflow, first year's outflow. Moving on, 500 is year 1's inflow. Year 2's second year's inflow is 400, third year's inflow is 300, and fourth year's inflow is 100. Okay, so our rate of WACC, I would say, WACC, or our rate of discounting is 0.1. We are taking WACC here. We are not taking opportunity cost. It's not mentioned in the question, I would say. So here, present value of 1000 is 1000, isn't it? We have already cleared that in the case of right, in the case of this. So if this is a case, right, first year 0, we are always here, okay, 1, 2, 3, and 4. In this 0, we are always here. So if 1000 is here, the present value of 1000 is 1000, isn't it? I've been stressing it enough. For 1, 2, 3, and 4, you have to discount it to period 0. Okay. For this 1, 2, 3, and 4, and 0, we are always in year 0. Moving on. So how we can calculate through calculator? We can just multiply through 1 point. We can divide it through 1.1, isn't it? What is the formula? 500. 500. If 500 is the cash flow, you can see the formula, divided by bracket 1 plus 0.1, right? 1 plus 0.1, bracket close, to the power how much? To the power 1, right? And you get the answer 454.54. You can calculate this through calculator and save it somewhere. There is save function as well in calculator, isn't it, in scientific calculator, right? So you can save this, and again you can do calculation of second one. For again to calculate second one, what you can do, you can take the cash flow, divide it by, since we are discounting, so we are dividing 1 plus 1 plus 0.1 bracket close to the power second year, right? 330. So likewise, you can calculate all the all the present values of these terms. So the what is this? This is an NPV. How? NPV, right? NPV. How? Because it's the net of all the outflows and all the inflows. So that is net present value. Thus, this is net present value, isn't it? Present value of all the inflows minus present value of all the outflows. That is called net present value. We get our NPV as 78.819. So this is how we calculate NPV. Our NPV is calculated. Now question asks us, what is the IRR for the current project, right? So if question asks us, what we'll do, like I was mentioning yesterday, we'll take a range, okay? Range of 10, maybe 10 and 20. You can take 0 and 10, it's up to you. You can take 0 and 10, right? You can take 10 and 20, it's up to you. So let us take 10 and 20 in this case, right? So what if IRR was 10%? What will be your NPV, right? What will you do? So if it was 10%, it's same, right? Because we are discounting, we have already discounted this project, right? We have already discounted this whole project through this is 10%, right? Our WACC was 10%. So our NPV will be same, 78.81975. Okay. So moving on, if we use 20%, what will happen? Again, we will manually calculate. This is same for 20. Let us do like, okay, let me like hide it. Okay. So this is a formula, right? For 20%, 20%. For 20%, what we'll do? Okay, so this is cash inflow, right? Divide by 1 plus, not 0.1, now 0.2, isn't it? Since it is 20%, to the power 1, right? It is the first year. So likewise, what we'll do? Okay, if you reference this power here, right? And if you hit enter, T3. Okay, so what you can do now, you can scroll it down. So likewise, 1000 is same, right? If you check this, it has already inserted 400 and 1 plus 0.2 to the power 2, G5, 1 plus 0.2 power 4, and we get your NPV, right? So what is the NPV? So likewise, if you sum, then you get your NPV minus 83.7191, right? So now here you have to understand one thing, okay? When you applied 10%, right? When you applied 10%, you are getting NPV of 78.81975, right? Positive. If you are applying 20%, please you have to please notice here. If you use 20%, then its NPV is negative 83%, right? So what we can estimate is that the answer is in between, right? The answer is in between 10 and 20%, isn't it? 78 positive, right? And negative 83. So answer might be in between. So how about we apply for 15%, right? You could have applied for 16% or even 14%. It's up to you, right? So if you apply 15%, okay, and if you solve like this again, so like again, if you apply for 15%, and then you can solve like this, you get the same, right? So you copy it. Okay, so if you calculate it, you'll get NPV of how much? Minus 8.32973. It's really, really close, isn't it, to 0? we are heading towards 0, right? So maybe it's a little bit of fractional only, minus 0.8.3. So we might want to decrease the rate by 1% so that the NPV will move towards positive, right? So if you understand that IRR and NPV will, these both metrics will be, if IRR, you will increase IRR, NPV will decrease. If NPV will be high, then usually IRR will be low, right? So that is if you calculate in this only, okay? So if you decrease 1% of the rate, right? So you might move towards, like you are decreasing the rate so that NPV will go towards 0, okay? So as you decrease the rate, then you get your answer 8.08 positive, right? So in 15%, sorry, at 15%, you get answer minus 8.3. At 14%, you get your answer 8.08, right? So what we can do now, again we can come in between, right, to find 0, minus 8 to plus 8, okay? So to find in between 0, what we'll do, we'll find the rate in between 15 and 14, that might be 14.5%, right? So in 14 and 14.5%, you will find your answer. NPV is near 0. This is how you calculate NPV, sorry, IRR through hit and trial method. So if there are any confusions, please let me know. Till then, I'll calculate this 14.5%. This is all calculator method, okay, so that it will be easier for you to understand. Any confusion? So our answer is minus 0.18, right? So it's 0, it's almost 0. So we can take NPV, our IRR as 14.5%. This is our required return, our IRR of the project, okay? Any confusion?
No, sir.
Okay, so great. So our weighted average cost of capital, right? So this is cost of capital, means buying price of our capital, okay? Our cost of capital, like how much have been, like how much money we can take from outside market, right? How much interest bank will apply, how much dividend our equity holders might want to take from us, right? So that is that summation is called weighted average cost of capital, right? Like this is a purchase, there is a purchase price of this mobile phone, right? If I purchase this mobile phone at the rate of 20,000 rupees, okay, then my WACC is 20,000, okay, got it? So likewise, our fund, there is also cost of fund, isn't it? So cost of fund is called WACC, weighted average cost of capital, okay? So interestingly, what you can observe is that our weighted average cost of capital is 10%, right? 10%. 10% is WACC. WACC, isn't it? And our IRR is 14%, right? So you can observe that our IRR is higher than WACC. So will you accept the project or not? Please understand that whenever our return is higher than weighted average cost of capital, cost and there is return, right? Return is higher than the cost, right? There is a margin of 4.5%, isn't it? Margin of 4.5%. So we are in surplus, right? So we usually accept, we always accept, if IRR is greater than WACC, then we accept the project, right? As simple. So what if the IRR was 10.1%? So what would you do? If IRR was 10.1%, would you accept the project or not?
Uh,
Yeah.
yes, surplus
Why?
is 10% profit हुँदैछ नि त त्यही
Yeah. So we accept the project because we are getting profit of 0.1%, right? Okay. So any surplus, if there is any surplus, of IRR over WCC, our cost of fund, right? Then we accept the project. For an example, I bought this mobile for 20,000 rupees, right? If I'm selling it for 20,005 rupees, then I'm going to accept the project because I want to get rid of this mobile phone, right? Or I want to profit in the first place. It's not like if I have minimum criteria that I want to profit at least 5,000, then I'll sell minimum at 25,000. Question has not stated us that. Question has only mentioned us that whether will you sell this mobile phone or not, right? That is only our question. It has not, question has not said that your required return was 5,000 rupees in this mobile phone. Question has not stated that, right? So if anyone gives me more than 20,000 rupees, that is my cost price, or WACC, 20,001 rupees also, I'm going to sell this mobile phone, right? Same thing applies with NPV, same thing applies with IRR. Even fractional change or surplus, we accept the project, okay? But if there is mutually exclusive project, whether I have to sell out of two mobile phones, I have to sell one of those, right? And both of them I purchased as 20,000. Selling one project, selling one mobile or project, I'm getting a surplus of 1 rupees. Selling another project, I'm getting surplus of 5 rupees, right? So which one will I select? If given that I can sell only one project, that is mutually exclusive, right? On our revision section also Arsana told, right? So in that particular thing, will I prefer 1 rupees or 5 rupees? Of course, I will prefer 5 rupees, right? If the project is mutually exclusive. Okay, so but what if these projects are independent? We are given freedom to choose, right? Freedom to sell any number of products, right? They are independent. Then what we'll do, we'll book profit of 1 rupees as well from this mobile, 5 rupees also from this mobile, right? So I hope I'm clear, right? If projects are mutually exclusive, then we accept the project. If not, we reject the project. And required return must be stated in the question, otherwise we will not consider required return, right? We don't know that per se, right? Whether we, if we are told in the question, then only we'll know, isn't it, what is the required return, right? So very basic. It's although it seems like this hidden trial method seems a little bit boring at first, try at least one. I would like to recommend you to try at least one problem at home, okay? And you'll get through it. Okay, so homework for you is that if you change this seat, okay, homework copy. Okay, so what you can do is you can just write here minus 2000, right? And then here 1000, change the figures, right? And you, so this is your homework for upcoming session, okay? So let me give you WCC of 12%, okay? Not 1400. I think let us do an incremental basis. So this is 1500. So this is your question, homework question, okay? And at the start of the next class, I'll definitely ask you. Okay, this is homework. Please find the rate through hit and trial method. Okay, please don't cheat, don't use Excel sheet. Okay, please find your homework is please find IRR of this project. Okay, if okay, so this is it, simple, through hit and trial method. Let me write hit and trial method as well. Through hit and trial method. Everyone, please note it, and can I copy in chat box as well? In chat box, it's not visible properly. Okay, so please take the screenshot of this, okay, and do your homework in the upcoming session. Okay, this is your homework. Okay, I hope I'm clear with IRR, right? I've been repeating concepts of IRR a lot of times because it's important concept and something which will be recurring in upcoming sessions. So moving on, note IRR and NPV. IRR and NPV can produce conflicting conclusions. Okay, the IRR and NPV method can produce conflicting confusions. There might be different kind of confusions. So out of these two mobile phone, sometimes NPV method might say that accept this project. Okay, right? You can accept selling this Samsung phone. Or another NPV method might say that, sorry, IRR method might say that sell your uh, MI phone. Okay, so it can be conflicting, it can bring conflicting confusions in you, right? But as we have been telling from the last class, always select NPV because NPV is the better method. Okay, so why it is better method we'll understand in upcoming slide. Okay, you should always have your why, you know, why is it. Okay, so types of project, if the project is independent project, okay, independent project, accept all projects whose IRR is greater than WCC. If IRR is smaller than WCC, reject all. Okay, I hope it is clear to all of you. Mutually exclusive, if projects are mutually exclusive projects, accept with highest IRR, accept the one which has highest IRR, right? And reject all whose IRR is smaller than WCC. Simple. So moving on, this is a case study. Okay, case study of NPV versus IRR. Okay, why NPV is better than IRR? I told you, right? Oh, NPV is higher than IRR. But let us go through example and understand this case and understand why NPV method is better. Okay, so let me read it. Buffett University recently hosted a seminar on business methods for managers. Right? Can you zoom the screen or not? Okay, you can zoom, right? Okay. Okay. So Buffett University recently hosted a seminar on business methods for managers. A finance professor covered capital budgeting, explaining how to explain NPV and stating that it should be used to screen potential projects. In the Q&A session, Ed Wilson, the treasurer of an electronics firm, said that his firm used IRR primarily because the CFO and director understood selection of projects based on their rates of return. I hope you understood this. There is one company called, what is its name? In the Q&A session, okay, treasurer of electronics firm. The name is not written, but there is one treasurer of electronics firm, and he mentions that he is preferring IRR over NPV method. Okay, he's doing the reverse case. Now let us understand why he's doing that. Because his board of directors understood rate of returns. Like if this project gives us 10%, if this project gives us 15%, then we are going to accept that project, right? So that way, board of directors understood it. Very practical case, guys, please focus on it. But don't understand NPV. These board of directors, they do not understand NPV method. Okay, so moving on, Ed had tried to explain. Okay, Ed tried to explain them why NPV was better, right? Ed tried hard to explain, but he simply confused everyone. So the company stuck with IRR method. Okay, interesting. Now a meeting on the firm's capital budget is approaching, and Ed asked the professor for a simple way to explain why the NPV is better. Ed could not explain his board of directors that please let's do capital budgeting through NPV method. IRR method is not supreme to NPV method. Let's follow NPV method, but he could not explain it to board of directors and convince them. So he is asking help in this conference to Buffett University manager, I would say, a moderator for help. Okay, moving on. The professor recommended the following extreme example. Okay, this is one example which professor told. A firm with adequate access to capital. Okay, about what does adequate access to capital mean, sir? You might ask that. So that means that if firm has potential to get loans from any kind of banks or any kind of sources, it has strong credibility or creditworthiness in the market, that is called having adequate access to capital. It can get capital in the click, right? And a 10% WACC, you see, I told you in previous class, WACC is usually taken as 10% globally, okay? But please don't please search your WACC in the question or mentioned in any illustration above. So and a 10% WACC is choosing between two equally risky mutually exclusive projects. Okay, the projects are mutually exclusive, means you have to select one project out of two. And always I always mentioned you that you cannot compare Bitcoin with the shares of Nepal Telecom, right? The risk percentage is high and low. You cannot also compare telecom share with fixed deposit, right? Risk is high and low, right? So always you compare between two projects if their risk, right, risk are similar. If risk are not similar, you have to do adjustment of risk weightage. Okay, that is a little bit complex concept. We'll be discussing that in later learning outcomes. So let's move on. Project large calls for investing. So name of first project is large. Okay, there are two projects. One is project large and another is project small. Okay, large and project small. Now project large calls for investing $1 lakh and then receiving 50,000 per year for 10 years. The length of project is 10 years. Okay, total period timeline is 10 years. Okay, and outflow, initial outflow here is $1 lakh, right? And it is destined to receive $50,000 per year. Every year it is destined to receive $50,000. While project small calls for investing only $1. See, project small is really small, isn't it? Now project small demands for investing $1 in between, sorry, $1 as an initial outflow, and it receives $0.6 per year for 10 projects. Is it clear? Okay, so we can see this in the diagram as well. Okay, so cash flow of L is CFO, cash flow at 0 is 1 lakh, cash flow of small is $1 only, right? And cash flow for period 1 to 10 is 50,000 every year, and cash flow for project S for 1 to 10 year is 0.6 only. So project is small, like the name indicates, and project large is large. While project small calls for investing $1 and receiving 0.6 per year for 10 years. I hope it's clear. Moving on, each project's NPV and IRR are shown in the table in the top right column. The IRR says choose S, right? But NPV says take L. Intuitively, it's obvious that the firm would be better off choosing the large project in spite of lower IRR. What it is trying to say is that, now interestingly, when you calculate NPV, right? NPV of project L, then you get $207,228. And when you calculate NPV of project S, you get just $2.69. Why? The scalability is different. Project S is small, project large is indeed large, right? And if you calculate IRR, right? If you calculate IRR, very risky. These projects are very risky projects. So if you calculate IRR, you get whooping 49.1%, and in small you get 59.4%. Now, by the rule of NPV, which one will you select? Project L or project S? You will definitely select project L, right? Because NPV at project L is huge, and the difference is huge, isn't it? There is $2 and there is $2 lakhs, right? And in the case of project L, IRR is 49%, okay? And in the case of project S, it's 59%. So first preference is project S for IRR method, and for project L, sorry, for project NPV method, project L is the first preference. Okay, so now we have got the conflicting result, isn't it? Project IRR is saying please invest in project S, project and NPV method is saying please invest in project L. What shall we do? Now in this electronics company, their management would have selected project S, not project L, right? But it seems hilarious. Why? Because intuitively it's obvious that firm would be better off choosing the large project in spite of its lower IRR. With the cost of capital of only 10% or 49% rate of return on 1 lakh investment is more profitable than 59% return on $1 investment. When Ed gave this example in his firm's executive meeting on the capital budget, the CFO argued that this example was extreme and unrealistic. This might be the thought process which is going in your mind if you are paying really good attention, right? We cannot compare between these two projects, right? If we compare between very small project and very large project, this might be the case scenario. But in practice, what happens? In practice, usually two projects will come which are kind of identical, right? There is a little bit of fractional differences. If there is a huge difference, you don't need to do capital budgeting in the first place. So that is the argument of firm's
So,
executive at the board.
so
Yes, Praveen?
what do we do? We compare with the relative relativity दुइटालाई हुन्छ नि त्यो सिङ्क गराएर त्यो सबैलाई त्यो उसमा रेसियो वाइजमा क्याल्कुलेसन गर्यो भने चाहिँ कम्पेयर गर्ने बेलामा
I did not understand you. Like calculating relatively means?
सो जस्तै मानव एउटाको 1 लाख छ भने अब त 1 लाख करोड भ्यालुएसन छ नि अर्कोको ऊ छ नि त्यही अनुसार रिलेटिभली तल गरेर के कम्पेयर गरेर डाउन साइज गरेर अनि त्यही अनुसार तल गर्दै भ्यालुएसन
Okay, so you mean to say that maybe we will like
स्मलको स्मल अनुसारकै कम्पेरिजन गर्ने त ठुलोको ठुलोलाई कम्पेरिजन गर्ने अनि दुईटालाई उ गर्ने के रिलेटिभ कम्पेरिटिभ भन्छ नि हामीले
Okay, so what I'll try to do is, Praveen, I'll write your query at my query book. Okay, I have one query book when student ask questions which I cannot explain right now. So is there any option? Is there any way? There must be something, right, Praveen? That is very intuitive of you. There must be something which can upsize S, downsize L, right? But यस्तो यो केसमा चाहिँ क्यापिटल बजेटिङको डाइरेक्ट फर्मुला गर्दाखेरि चाहिँ एनपिभी र आइआरआर गर्दाखेरि वी कुड देयर इज नो कन्फ्लिक्ट यसमा खासै हैन वी क्यानट फाइन्ड कन्फ्लिक्ट बट अब दुईटा प्रोजेक्टमा प्रोजेक्ट अल्दो टु प्रोजेक्ट्स आर लिटल बिट आइडेन्टिकल एउटा अलिकति सानो अलिकति ठुलो भयो भने त इट विल नट बी जस्टिस फर सानो प्रोजेक्ट त्यो हैन प्रवीण यु मिन टु से एन्ड वी माइट वान्ट टु ब्रिङ बोथ इन्टु सेम रिलेटिभ कम्पेरिजन राइट
रिलेटिभ कम्पेरिजनमा गरेर
Okay, so I'll try to find if there is any way, right? Relative comparison go. If there are any, I'll let you know. Okay. So oiliko case ma we select NPV. Why? Because like 1 rupees by ni, it increases the value of shareholder nita. Like you duty project ma, if it makes sense, hey. In the case of these both projects, if 1 rupees is added to the firm's profitability, or if 1 lakh rupees is added to the firm's profitability, 1 lakh adds more value to shareholder rather than 1 rupees, right? Whether, regardless the fact that project is small or project is big, isn't it?
Yes, sir.
Right. So when NPV is bigger, right, it increases more profitability, more value to the firm, more value to the shareholders' wealth. So NPV was generally considered as one of the metrics to compare any kind of projects, right? But yes, this kind of case scenario happens, like, and you have been arguing about relative comparison as well, and that kind of cases might come in practical life, right? You see, there is no solid truth in finance. There is always subjective interpretations and something which can bring more logic to the table and argue with better facts, right? So great. So moving on, let's finish this. Okay, when Ed gave this example in his firm's executive meeting on the capital budget, the CFO argued that this example was extreme and unrealistic, right? And that no one would choose S in spite of higher IRR. Ed agreed, but he asked CFO whether the line should be drawn between realistic and unrealistic examples, right? When Ed received no answer, he went on to say that one, it's hard to draw this line. Okay, two, the NPV is always better because it tells us how much value. See, how much value each project will add to the firm, and value is what the firm should maximize, right? It will definitely add to the value and maximize the firm's shareholder. Now, the president on the corner was listening to this whole conversation, and he declared Ed as winner, and company switched from IRR to NPV method. Now, Ed is now the CFO. Very small story to that as well. Interesting, isn't it? Okay. So, any confusion in this? I hope you now it is crystal for you. It must be. Okay. Okay. So, if we are clear, shall I move on to next project, next slide?
Yeah, sure, sir.
Okay, so 3-4 multiple internal rate of return. Okay, now I ignored one of your query in the first class. Someone was asking that, sir, one project might have 2 or 3 kinds of return, right? One of the student asked that question, right? And I ignored your question then. Why? Because we were about to study here, right? So this was the two. Sorry, this is a whole 10 years, right? Okay, so let us go one by one. A problem with the IRR is that under certain conditions, a project may have more than one IRR. Okay, okay. So now, one of the this I have to show you through an example. Okay, except my. Okay, so okay, this point I'll be showing you with an example. Okay, a problem with IRR is that under certain conditions, a project may have more than one IRR. Certain times it might be like interesting to you that in one project, right? In one project, the rate of IRR, or the rate of return, IRR, internal rate of return, there might be more than one IRR in one particular project. Okay, so that is a flaw of IRR as well. If signs of the cash flow change more than once, the project is said to have non-normal cash flows, for example. Okay, so there are two kind of projects. Okay, one which has one IRR, one which has more than one IRR. Okay, let me show you. There are two kind of cash flows. One normal, another non-normal. So if you see the normal, it is exactly how we are practicing our questions up to now, right? There is initial outflow, then there are inflows after a certain period, right? Or there are outflows, certain number of outflows, then firm will start to generate revenue, and then inflows will start to come, right? That is normal. Now abnormal, non-normal, not abnormal, I would say that is non-normal. It is subtle term. Non-normal, what happens is that there is outflow in the initial terms, and you can see outflow at the back end as well, right? So there are certain inflows, and at the end also there is outflow, right? So again, there is outflow in the start time, and in between also there is outflow. So you can rough sketch in your mind that if your outflow appears after a few years, right, in between or after the induction of inflows, then those are non-normal projects. Okay, so you might say, sir, you have been telling a lot of theories, so does it exist in practice? Practice is in practice, the stripped coal mine project company spends money to purchase the property and prepare the site for mining, right? First of all, it purchased the land, and then it started to prepare the mining project, right? And this outflow is due to that preparation of the mine. Okay, so let me show you. So this one is for the company of coal mining to prepare this outflow for preparing its ground, right? As the ground is set, equipment is there, everything is ready. Now will start to generate our revenue. Then it has positive inflows for several years. The expiry of until the expiry of the coal mine, right? Until its fruition, right? It will start to generate our inflows, right? And then company spends more money to return the land to its original condition. Now, what that coal mine has to do is that after completion of its project, it has to return that land to its original condition. Exactly like an example, if we are tenant or we are taking in rent or at a certain house of certain house owner, what is there? There is terms and condition in the rent paper, isn't it? Like, today I'm giving you this house at this condition. When you leave this house, the bulbs, the floor, and all the conditions should be exactly the same as I gave you, isn't it? So that is the condition of whenever we take house on rent. Likewise, when this land is taken by coal mine, it promises that when we leave this site, the living the total period might be 50 years, 20 years. It depends on how big is the gold mine. Okay, so when we leave that gold mine, then what we will do, this outflow happens. We will start to like start to spend money, invest, so that the land will be taken back to the original condition, right? So that land can be reused in other projects as well. So likewise, then company spends more money in condition. In such project might have two IRR, that is called multiple IRR. In this case, when there are multiple outflows, I would say not multiple, but unpatterned outflows, right? Which doesn't come in a pattern, right? So these kind of in these kind of projects only we get multiple IRR. Is it clear? It's very interesting, very important to understand this. Otherwise, you might be confused with normal kind of project and non-normal project. Okay, in normal projects you will find one IRR done. There will be no issue. But in non-normal project like this coal mine, you will find multiple IRR. I'll illustrate you with an example as well. Okay, don't worry. Okay. Moving ahead, a firm is considering potential stripped mine project M that has cost of 1.6 million and will produce a cash flow of 10 million at the end of year one. Then at the end of year two, firm spends 10 million to restore the land to its original cost. Okay. In this example, what happened? In the year zero, for that coal mine, they purchased equipment, they started to bring raw materials, and then they started to erect the structure, and then they spent around $1.6 million. In the first year, they earned $10 million revenue, and year two, again they have to leave the gold mine, right? So they are they are now taking the land into its original condition, right? So this is our non-normal cash flow, right? See its pattern: negative, positive, and again negative. These two negatives are not together, right? There is no pattern. So this is kind of non-normal cash flow. So it definitely will have more than one IRR. Okay. So if you calculate NPV, NPV will be equal to 0 when so at the rate of IRR, when you calculate IRR, NPV is 0, right? That way we hit, what we'll do, we hit hit and trial method, right? We apply 10%, then 20%, and then 0% likewise, and 15 and 14 and 14.5 likewise. We perform hit and trial method and find IRR. Okay, so so likewise, if you calculate IRR of this project, what will happen is that at discount rate of 0%, okay, if you can calculate yourself, please open your calculator and you can hit, because there are not much here, 0, 1 and 2. So I have given small example. Okay, you can take out your scientific calculator and hit this, you can find NPV. Okay, okay, please test 0% discount rate. Okay, everyone, please test this 0%. If you test this 0% discount rate, okay, you'll get NPV of how much? 1.600. Okay, if you hit 10%, you'll get NPV of, since it is negative, right? What you'll do, as the NPV will be negative, let me zoom it. Okay, so yeah, okay, You can see here, okay. I think it's visible, okay. So this here you can see, if you hit 0% discount rate, you'll get an NPV of minus dollar 1.6, okay. Since it is in NPV is in minus, what we'll do to take NPV into positive, okay, you'll try different discount rate, right? We try 10%. Now if we try 10%, we'll get minus 0.7736. Now the minus sign is narrowing, it's moving towards 0. We must find that 0 when NPV is 0, right? We are trying to find place where rate where NPV is 0, isn't it? So we try third time, we try 25%, right? Then we get NPV 0. Before that, you might try for 15%, you might try for 17%, and then finally you reach to 25%, right? Gradually you might reach, or you might like by luck of chance, you might get 25% at once, okay? At 25%, you get IRR 0, okay? But since it is non-normal project, what happens is that you get NPV 0. If you keep on trying, if you try 110% discount rate, you will get NPV of, okay, if you try 110% discount rate, you get NPV of 0.8, and then if you increase that to 400, then you get NPV of 0. So then in the both cases, you get at the rate of 25% and at the rate of 400%, you get NPV as 0, right? So we have multiple IRRs in this case. So if you see graph, if you plot it in a graph, what will happen is that, okay, so this is these are the rates 400%. This is the one where we have 0%, right? And here is NPV in millions, right? So where the NPV is 0 at the rate of 400% and near 0 at the rate of 25%. Okay, when IRR 1 is 25, IRR 2 is 400, right? So is it clear? For this, please calculate yourself. You can calculate this. I think I have also solved 2 questions in the initial phases of this class, right? So please calculate NPV at 0, 10, 25, 10, 110, 400, and 500. Then you will start to find these. And if you plot this in graph, you will find this kind of graph, right? So NPV raises to optimum limit, right? Up to here, right? Up to 1. And then it starts to decrease down 0.7. Then it starts to decrease 0.5. Now as it is decreasing, you will find that now we might have to increase IRR, and then we'll get NPV at 0, right? And you increase IRR, then as you increase IRR to 400, then you finally get NPV at 0. So now I assume that you can find NPV, sorry, IRR and NPV both, right? Yes. Can you please repeat the question? Who was that? I'm waiting.
Sir, everything is clear.
Okay. Okay, so moving on, I think we'll be discussing. There is one question. This is also your homework. Please do this at home. Slide number 13. Please take a snapshot of this. Okay. And please do this homework. I'll share these 2 in iLearn as well. The one which I give you to calculate, and this one both. Okay. For the weekend, please calculate these 2 as a homework. Right. So I hope that I have made IRR, NPV much more clearer to you in this class. And NPV and IRR are the most important concepts. And NPV usually, if you see NPV, it's really important concepts. Okay. So we have already overshooted time by 3 minutes. Apologies for that. So everyone, thank you. If any queries, I'm waiting for your queries for 10 seconds. Okay. If you have any queries, please let me know. Any suggestions? Okay, so everyone, again, I would like to strongly insist you please go through these classes, right, and cement your concepts. I'm trying to simplify as best as I can for your understanding. Okay, so let me sign off then. Thank you so much, everyone. Please do your homework. I'll be sharing both in iLearn. Okay, bye bye.
Thank you, sir. Have a nice day.
Have a nice day. Bye bye.
Good morning, class.
Good morning.